What is up, guys? Welcome by this new stream. Today I'm gonna start with explaining ranges. So first we have done market structure, and now I'm gonna talk about ranges. The next few subjects will be ranges, liquidity, supply and demand, and after that we can go to the more advanced stuff, Wyckoff, Bojan, lows and highs. But first the basic needs to be there. So Buddy's drinking some water. That's good. All right, so ranges. Let me get to a fresh chart for this. All right, so guys, first I want to say some rules. There are rules to ranges. The first things you need to know, price action 90% of the time ranges. You have two options. Price is ranging or it's trending. Even if price is trending, every block is a range. And ranges, market makers either accumulate in a range or they distribute to get a reversal. It is in the end all about supply and demand. The market makers, the OTC desk, the exchanges with all the information, they will always hedge retail. Why? The market makers will always win. They will always win. They have all the data from the exchanges. They know exactly where your stop loss is. They know all your past data. They let all the craziest AI algorithms go on it. And they just want to engineer as much money. They want to extract as much money as possible from you. So they will give you hope sometimes, but in the end, they are just, price is just ranging or trending. Then we have a rule to ranges. If we are trending up, so if you're trending up, this is market structure, right? You pull your range from high to low. If you tap the EQ right here, your range is confirmed. Same here, initial range high, initial range low, EQ tap right here, your range is confirmed. Even if we don't create a Wyckoff or something, it is still a range. So even if you do this part is still a range. Vice versa, so if you're trending down, you pull your range from low to high. It is always, you always pull your ranges in market structure. Initial range low, initial range high, EQ tap, range is confirmed. So what do we know and how can you use this? So even if in this leg, for example, you have one range going on from this low to this high, if you tap the EQ, you can also dissect the market structure between this low and this high and see, for example, well, let me cook. In this leg, so I'm now gonna do this leg, you can even have new market structure. So this part is this part, and then you can even pull your ranges like just how I did on the higher time frame, on the lower time frame. So how can you stack confluences with this? For example, if you have a mid time frame range, so we call this mid time frame, and you create a lower time frame range into your mid time frame range. So you create a lower time frame range in your mid time frame range extreme premium. So extreme premium. So what I also want to say, this part is premium pricing, everything trading above the EQ. This below the EQ is discount pricing. So how can you get the highest probability setup ever? That's if you have a mid time frame range and you create a lower time frame range in your premium section of your mid time frame range, and then you create a Wyckoff. So we have a mid time frame range high, you create a new range coming into it. So initial range high, initial range low. And if you then start a Wyckoff in your mid time frame range high on the lower time frame, that is where those high RR opportunities are. So now I'm just gonna do some examples. So on Bitcoin, Let me take a sip of my water. So in the last two educational streams, I explained how we can have valid structure. You need 2 consecutive candles up, 2 consecutive down. So now I'm gonna dissect the structure between this low and this high. Now, what do we see? We have structure trending up. There are ranges all over the place, right? What do you see? You see 2 consecutive candles trading lower than each other, 2 consecutive higher. So you can pull. We know we are in an uptrend, so you pull your range from high to low. So this is a range, guys. Now, then I'm gonna zoom in more. So let me actually get back in time. Now I'm on the weekly time frame. Highest valid range is the weekly range. Guys, higher time frame always overrules lower time frame. So if you on the lower time frame see for example a Wyckoff, so you do something like this, but on the higher time frame it's still for example this is a 1 hour range, and on the 4 hour these steps disappear and it's just 1 tap. Then higher time frame still overrules lower time frame, and then you can still take the high one more time. On the lower time frame it looks like a 4 tap, but on the higher time frame it's just a Wyckoff getting created. Lower time frame Wyckoffs always go over into mid time frames or higher time frame. Back to the ranges. So we have a weekly valid range going on right here. Now let me then zoom into the daily. Guys, always make sure to make your charts clean. Initial range high, initial range low. Now I will remove the, so you trend down, initial range high, initial range low, EQ tap, range is confirmed. So what do we see here? We have some interesting data, because we are also from this high to this low and to this low in a downtrend, right? And we know in a downtrend you can pull your range from low to high. So you also have a range going on right here. So in the bigger range I will remove the EQ to make it clean. And what do we see? Our initial range high is fresh. Our initial range low is getting taken. So you can pull your Wyckoff here. So just how I explained, higher time frame, we have a mid time frame range in discount pricing of your higher time frame range. So that's an extra confluence. Now I'm not gonna go into the Wyckoff part yet, but yeah, this was a pretty nice Wyckoff. And with Wyckoff, we know you look in the structure of your third leg. So you look at the structure between this high and this low. Now, simply on the higher time frame, you break it here. So you could have taken a long here with your stop loss here. But you can also dissect the structure between this high and this low. And if you break that structure, you could already have entered a long here on the lower time frame with your stop loss below your market maker point. So this is a Wyckoff Model 2 accumulation. Initial range low, initial range high, deviation 1. This is where you grab extreme liquidity. Wyckoff Model 2. So that's how you can use multiple ranges. So guys, don't get distracted by lower time frame ranges. There's always a higher time frame range going on, and higher time frame always overrules lower time frame. But guys, higher time frame bigger than mid time frame, higher time frame bigger than low time frame, mid time frame bigger than low time frame, but mid time frame plus lower time frame overrules higher time frame. These are the rules, guys. And even I'm now saying, yeah, you have a mid time frame range. So we have a higher time frame weekly range, we have a mid time frame range. But even guys, I can search even more. Let's go on the 1 hour. For example, we are creating a Wyckoff here, right? This is your LPS of the Wyckoff. And then you're searching, can we have another LPS? Because we know how we took extreme liquidity right here. So this is your extreme liquidity, but we'll go over into the executional videos about Wyckoff more, why this is extreme liquidity. It's, I can say it quick, it's your first market structure pool. That's your extreme liquidity level. For a valid Wyckoff Model 2, you need to take extreme liquidity or hit extreme demand. For an accumulation, vice versa, for a distribution, but then you need to take extreme supply or extreme liquidity. So we took out extreme liquidity. Wyckoff Model 2 confirmed on the market structure break. So this is your market structure break. This is where we confirm the Wyckoff. Then we know market makers are definitely accumulating here. Confirmed Wyckoff Model 2. So we know we will go, there's a 90% chance we will go to this high first before visiting this market maker low. This is your LPS and market maker low. This is your STB. This is your SC. Just for the culture, putting it on the chart. Why not even make it better? ST. All right, so then we know we need to mark out extreme demand again to make another LPS. Now, we pushed up super nice. I see this is basically only liquidity, right? These are dumb lows stacking up. So here is where we made like a nice demand. You see this whole thing is demand, but we can dissect it more on the lower time frame. So you see this is your last sell off, buy. Definitely market maker involvement in this. Retail is not doing this. Retail is not going on the buttons and creating candles like this. So you can mark out this whole zone that we already hit right here. But you can see this last bearish candle right here before market makers took over with the imbalances candles. And guys, then I just use the same rules. From this high to this low, you're downtrending. When you're downtrending, you can pull your range from low to high. Initial range low, initial range high. We see that we keep initial range high fresh. We are deviating initial range low, boom. This is where you take extreme liquidity. You see how you take all these lows here. So this is a confirmed Wyckoff Model 2. Now, then we can make it even more fancy. We can zoom on the lower time frame and see what was happening. Guys, always make sure your charts are clean. Let me delete this. So this is where we hit it, but I can even go lower time frame, even more. You see how we hit like extreme demand here. Beautiful. So I can even delete this shit. Yes, you can always even more refine. So how I just explained extreme liquidity, first market structure low, this is your extreme liquidity. Now, this is where we took out extreme liquidity. All demand is mitigated, extreme liquidity taken. Then I'm gonna dissect the market structure between this high and this low. All right. Normally you have like the button. Wait, let me cook. So what do I always know? I say de-risk quickly. Now this is where you see your first signs of some sort of a distribution. So I would definitely have taken 50% off here. So then you do sell. Now 2.5, 50% sell. 3.3 fucking K in the profit. Stop loss, remain under the market maker low. We like to keep the position always getting protected by the market makers. Next TP, right here. But what do we also know? We are in a higher time frame confirmed accumulation. So I enter all nice and shit that I enter an lower time frame setup, but I know we are still trading below the EQ. So yes, I just took 50% off. So am I then gonna full TP at a lower time frame range high? Well, this is the technical target of the Wyckoff that is confirmed right here. Wyckoff confirmed. We will go to this high first before taking this low. Now, I get a nice long in the LPS of the Wyckoff. So yes, position is now de-risk, 3.2K in the profit in pocket, and then you just let it play it out. Boom. We hit the initial range high of the technical target of the mini Wyckoff that we entered here. Now you can take, for example, one more Bitcoin off the table. And then you let it run for the technical target of the Wyckoff. Taking this liquidity point would take another 0.5 Bitcoin off. Boom, done. How much we still have left? Where can I see this? Just done, trade done. Boom. Close position. And that's how you could have nailed this range. So back to, that's also alright. Like, of course, I'm explaining ranges right now, but now I'm also explaining a little bit Wyckoff just for the culture, you know? But if you are new to these concepts, just first study the ranges. Don't over obsess about this Wyckoff. Later in the Wyckoff educational videos, I will go more into depth. Wait. I will go more in depth how to trade these Wyckoff ranges. But just quickly for the culture. Wait 1 second. So we know, I just explained this whole range, how you could have played this with discount ranges, with internal ranges, nice. Now, then we just go further. We are trending up. If we are trending up, you pull your range from high to low. Initial range low, initial range high, we're deviating the high, Wyckoff M1. Now, but it's not gonna give us a trade in higher time frame range, right? So you need to zoom in here, and maybe you have a lower time frame range in your higher time frame range extreme premium, so you can get into nice short positions. Then we see from this low to this, from this high to this low, we are downtrending, so you can pull your range from high to low. So this is a valid range. But what we also have is we are also uptrending from this low to this high. And if we are uptrending, you can pull your range from high to low. Hey, what do we have here? We have in our LPSY of the Wyckoff. So this is your LPS of the Wyckoff. So UTED test LPSY. We have a new range. Initial range high, initial range low. Initial range low is fresh. We start deviating the high. Technical textbook Wyckoff in your LPS of your higher time frame range. This is like most easy short ever. Will not got any better than this. Boom, technical target hit of the Wyckoff, TP time. Now, from here to here, you're downtrending, so you pull your range from low to high. This is your range. Initial range high, fresh. Initial range low, deviating. Boom. Wyckoff right here. dissect the structure between this high and this low, took extreme liquidity right here, break mark structure, enter stop loss TP1. Now from here to here we are uptrending again. When you are uptrending you pull your range, initial range high, initial range low. This is more of a PO3 schematic, but it's still also valid to look at it as a Model 1 distribution. From here to here you're downtrending, initial range low, initial range high. Little bit more like a PO3 schematic where this is your range, manipulation, expansion. We're trending up. Now, then we go higher time frame wise again, because higher time frame always overrules lower time frame. Now, if we just go like on the monthly time frame, right? Monthly time frame, 2 consecutive candles trading lower than each other, down, 2 consecutive up. So we have an initial range high, initial range low. Initial range low is fresh. We are taking in the initial range high. Then we're going to zoom in more here. Maybe we have like a mid time frame range as well in our higher time frame range, extreme premium. Now, let's zoom in. Now, we are from this low to this high, we're trending up. Initial range high, initial range low fresh. We start deviating the range high. Wyckoff in your higher time frame plus range. Then you're going to zoom in even more. So initial range high, initial range low, deviation 1, deviation 2, Wyckoff model 1. On the higher time frame it becomes 1 tap. Now, from this low to this high you are downtrending, so you put your range from low to high. This was a little bit more difficult because this was actually the cycle top. There were so many positions buying, so the market makers didn't even have to create like good time displacement for your third tap. It was only some sort of a PO3 schematic, but the initial range low was already deviated. But right here, manipulation phase. In your LPSY of your Wyckoff. Damn, guys, this was the range explaining part. Let me know if there are any questions about the ranges. The main parts, when you're uptrending, you put your range from high to low, downtrending, low to high. You have always 20 different ranges going on. Make sure you can connect the dots. You will not be able to connect the dots your first day studying ranges, but if you have seen 100,000, 200,000 ranges like me, you already see through all the noise. You see everything. You know exactly when something looks good, when something is not looking good. But what is the secret? Where is the magic? It is in that fucking work that you are avoiding. Those 15 hours a day, just go back in price action how I just did. I already did this 10,000 times on every chart that's out there, and I know every part of price action out of my head. And I cannot do the work for you, but the information is there. Now it's up to you. Mm-mm-mm. Need to watch this right now, guys. Um, Lack of insight. Okay, talk about range deviation and manipulations. That will be in another other video. Is it possible to have an upthrust during an accumulation range? Yeah, guys, you can also have like an distribution into reaccumulation. So distribution into reaccumulation. But normally I don't like, I see some people put a range, like so for example, you have a distribution. And I see some people pulling the range from this high to this low, also when you have that accumulation. But it is super difficult to play distributions into accumulations. Then I just like to watch this range. So then you just have a liquidity level where you have a new range from this low to this high and you're playing this lower time frame range. Wyckoff Insider, how did you draw extreme remind extreme demand back on the accumulation? So, all right, quick lesson. Extreme, on a weekly time frame, this your initial range high, this your initial range low. Initial range low stays fresh, building liquidity, but we also have structure from this high to this low. When structure is trending down, you can pull your range from low to high. Now, how do you map out extreme liquidity in your range? As I just said, first mark structure pool. First mark structure pool. All right, so first mark structure pool, break structure, TP1, TP2. TP1, TP2. Now on USDT dominance, I like this new range from this high to this low. For new longs, I'm watching this level. And this monthly close is gonna be next level important. Oh, guys, it's not looking good for the bulls. It's not looking good for the bulls. Don't fade monthly Bojan lows like this. Can give a quick example how these monthly Bojan levels work. Just for the culture. So guys, are there any questions? Let me know if the range educational video was good. Video live stream. I'm not a video guy. I'm just raw doing it in the stream live. I don't make mistakes. Why? Because I studied too hard to make mistakes. Have I made mistakes in the past? Obviously, everyone makes mistakes. But if I'm gonna explain how ranges works, how Wyckoff is working, I don't make any fucking mistakes. And I'm not here to get cocky and shit because of saying that I'm that confident. But just guys, I just studied too hard. And if you have studied hard, you can be confident. Because I have the undeniable proof. So extreme liquidity doesn't have to be in your range. It is always in your range, extreme liquidity. What do we want to have charted, guys? Bitcoin price action is also clear. We have a range from this high to this low. We also have a range from this low to this high. Currently, we are around the EQ of a mid-time frame range, so you are more careful. We have a nice demand zone right here, but I'm still interested. I'm now interested in this new lower time frame range. So yeah, looking for nice longs if we do something like this. On this. Ethereum. Let me actually get this chart going. So our COVID Black Swan event, you hit on this chart, market maker demand, Wyckoff model 1, 2-month bullion low demand. And now we have a new range from this high to this low as well. We are currently approaching monthly bullion plus infinish monthly. We see how we make tops, so let me see this top. So Bitcoin tops first, after you get the top here. Same right here. Here was just accumulating. But this chart is mainly Black Swan type of chart. If I'm just gonna look at this chart myself, I see we have super strong demand chilling here. So the next Black Swan, just see when you hit this level and then just long everything. Watching this level and watching this level. Lay every chart. Let me actually get some SPX going on this. Alrighty. Nice. 3-month bullion low on SPX in 2009. First pullback. I think you have a weekly bullion low right here. Well, coming in this demand. This low was your COVID bottom on SPX. So you hit this level, you long the fuck out of SPX. This low was your initial range low of your Wyckoff. Maybe on the lower time frame you have some sort of accumulations right here. This was your last low. Alright, so guys, get some stock charts going on this one. Go for it. I'm not sharing tickers that are not good. But guys, POI zones are mapped out for Bitcoin. Time for me to go to the gym. Hope you learned something today. We will also do another video about advanced ranges, but that will be later in later stream. Next, I think, will be liquidity or supply demand. Guys, thanks for watching. Adios.